So last week we said something had to change. Because we've stepped away from contracting, property now has to provide an income for us. Not eventually, but now. And the reality is, flips that sit in conveyancing don't pay the bills. So this week we've made a move. We've secured a partnership with a company that can help us monetize the deals we can't purchase ourselves. So instead of letting good opportunities go, we can now turn deal flow into income, and that changes the cash flow pressure. It allows us to keep sourcing, keep offering, and keep building momentum. But we're still waiting. Both of our purchases are in limbo, no confirmed completion date on either, and when you've gone all in, delays feel different. Every week matters. So on the upside, we're ready. The refurb challenge is locked and loaded. The minute that first property completes, we move. We also had a second viewing on the commercial unit, and this one is interesting. Potential for 2 one-bed flats and a 2-bed flat, or possibly 2 larger units on paper. Around 4,750 gross per month, a potential property unicorn. But with that level of return comes risk, and we need to decide how far we're going to be prepared to push. Plus 3 more viewings this week, a 39,950 flat in Blackpool, a 65,000 2-bed house in Blackpool, and continuing due diligence on the commercial property. So momentum's building, and now it's about turning that momentum into income. This is the next deal.
We're just back from our viewings in Blackpool, and this is one of the properties that we've looked at today. This is the property. It's a 2-bed semi, and it is up with an auction site for sale. So let's go back into our analysis and do a couple of user deals. So we can see here what our deal source of figures were. So let's create a new deal, and what we want to do now is look at what our lowest offer can be for it to be a deal for us as investors, and also what our max offer. So let's have a look here for user deal. So obviously this is what we're looking at here, our return on investment, keeping this above 20%, but let's see what we could get our best deal for. So let's change this to an offer of, say, 60,000, let's say. Now, it is up for auction, and they've put a guide price of 65, but it doesn't automatically mean that offers have to be over that, or 65 or over. Some properties don't sell for the price that has been put on them, so going in with a lower offer is absolutely fine. So let's look at 60,000 if you went in with that offer. Our gross development value is 120. We've got refurb costs of 21 here, and probably with the work maybe outside as well, because there's a garage that would need some attention. I'm going to leave the refurb costs at 21. I think that's pretty realistic for the moment. And don't forget your professional fees. This is what people do forget, and it makes a massive difference. We haven't just got normal conveyancing fees on this property. We've got a minimum of £7,000 of auction fees to put on. So that takes the professional fees just short of £10,000. It really does make a difference. So always remember to put that in. So let's go down here and let's have a look at what our return on investment is. So we've got a return on investment of 24.42, and we've got a profit of 23,500. So that is likely going to be my first offer, my lowest offer. So I'm going to save that. But what I'm also going to work out as well is what my maximum. So if I put my offer in and they come back to me and it's been refused, I've got another offer to go with, but it would be my last and final offer. So let's create our maximum offer that we could go for to keep this over the 20%. Let's have a look here. So let's go in at 62,500. Oops. Again, change our professional fees here to the 10,000. And what's this doing here? So yeah, pretty much that we're just over 20% there. So we can't go any higher than 62,500. So our minimum offer is going to be 60,000. And from doing our figures, we can see here the max we could go to on this deal would be 62,500. Can't go any further. The figures are what they are. You cannot, if we were to go in, say, at the 65, which is the guide price for this property, you could see this takes our return on investment below 20%. Not a deal, can't do it. So that's our max, 62,500. So at least we're organised now. We can put our first offer in. If it comes back as refused, we've got one more final offer to go back in with.
Okay, so we've just been around property in Blackpool, 2-bed for 65,000. It's in need of obviously some work. Looks like an elderly person lived in the house beforehand. So it's got the numbers. Basically, we're thinking where we'd be looking at for a purchase would be around 60,000. We think the GDV potentially is around 120,000. Refurb costs around 21. Professional fees 2,750, and then potentially, if we were looking to GDC, looking at around 89,000. Decent ROI on this of around 34.15, which means essentially we could pull all our money back out, or if we wanted to flip it, we could expect to make about 30,550 quid. So it looks like a pretty good deal, this, and something we'll follow through. It is up on auction, and it does look like they're getting quite a few people looking at it, so it might be quite a difficult one, this, to get across the line, but we'll keep you posted.
We're about to arrange our viewings of properties for this week. So here is a property that our assistant has found us and put into our view column. So let's have a quick look at the figures and see if this is a viable property for us. So we can see it's a 1-bedroom apartment for sale, and it's in Blackpool. It's up for a very reasonable 39,950. So let's have a quick look at the photos. So this has obviously been used as a bedroom. You see where the bed's been, but it looks a good size. This will be your lounge area. Again, that's a good sized room. Really good sized kitchen. And then a small bathroom at the end. And obviously with this being a 1-bed flat, we've got the outside area. So that's an ideal refurb property, absolutely ideal. So let's have a look what our deal sourcer has analysed this property. So we're up for just under £40,000. So our sourcer has come in with an offer of 35,200, because obviously we're investors and we're always going to go in with a discounted offer, and that's a discount of 12%. We have a gross development value here of 70. So we'll just have a quick look at some prices nearby, just to see if this is a viable price. So we've got one there at 50,000, one bed there at 70, another one at 70, one there at nearly 80. So yeah, I'm quite happy with that price. I think the sourcer has put it in as 70, but we can alter that once we've viewed the property. Moving down, our refurb costs, we're coming in here at about 17,000, and I think that's quite a reasonable refurb cost. Obviously, once we view the property, we can do a much more detailed schedule of work. But it does need a new kitchen, needs quite a bit of work doing on that bathroom, and also looking at the property, we could be you could look at opening up that kitchen and lounge area to make it a bigger area, an open plan, but we can sort of confirm that when we view. So when we are investing in property, we need to make a decision on what our plan is with this property, and that all depends on the numbers. So we need to decide whether we're going to flip this property or we're going to keep hold of it and add it to our portfolio, where we're going to buy it, we're going to buy the property, we're going to refurb it, we're going to rent it, and then we're going to refinance it. So how we decide this is dependent on these figures here. So what we need to look at is how much profit are we actually going to make from this deal, and how much funds would we be leaving in. So the gross development costs on this property are coming in at just over £58,000. So what it would actually mean is if we came to remortgage this, to refinance it, we wouldn't be getting all our investment back out. You can see here we'd be leaving just short of £6,000 in the deal. Ideally, what we want is to be able to get all our money back out, which then gives us scope to go on to our next investment. So if once we've viewed this property, these figures are correct, this one will be looking like we would be flipping it, because we're not going to get all our money back out, and we can make a profit of 11,000, well, just short of 12,000. Again, that's a pretty low profit for a flip. But don't forget, this property is coming in very, very low. If it was like 140,000, your profit's going to be a lot higher than this. So that's a decision we will make once we've viewed, because when we come back from the viewing, we will make our own user deal and just alter these figures as appropriate.
So earlier today we viewed a property in Blackpool, a one-bed flat, currently on the market for £39,950. Flats obviously need a refurbishment, as always, as we're looking for. Just sort of looking at the numbers, we're expecting that we could get a sort of GDV of around 70,000 on this property. We reckon there's probably about £17,000 worth of sort of refurb costs. So off the back of that, we expect that if we bought it for around the sort of £30,000 mark, we could sort of get a sort of 33% return on investment, which would be amazing. And potential there to then BRR this property and retain the actual flat as well. So we're going to put an offer on this tomorrow, and we'll see what comes of it. We'll keep you informed, and we'll get back in touch.
So this week was about one thing: control. We can't control conveyancing timelines, and we can't force completion dates, but we can control how we respond. So partnering to monetise our surplus deal gives us breathing room. It keeps cash flow moving while we wait. So it allows us to stay aggressive with offers instead of retreating. So what about the commercial unit? It's got huge potential, but will only move if the numbers protect us. 4,750 gross per month sounds very exciting, but yield means nothing if the risk isn't managed properly. And the Blackpool properties, the smaller, the simpler, but possibly quicker wins. Sometimes momentum comes from singles, not home runs. So next week, we're pushing for clarity on completions. The refurb challenge is ready, and we keep analysing, keep offering, and we keep moving. Because this journey only works if the deal stacks and the income follows. If you want to see what building a property business with no safety net really looks like, the delays, the pivots, the pressures, subscribe and follow along. The next deal is always closer than you think.